So, you've landed in Japan, you're starting your new job, and you are ready to go. Then that first pay slip hits your inbox. You see the big number up top, and then a much smaller number at the bottom. In this explainer, we are going to crack that code and figure out exactly where all your money is going. You know that feeling, right? You get this great job offer, you're excited about the salary, and then that first paycheck lands in your bank account and you're just staring at it. It's way less than you thought it would be. It's like your hard-earned yen performed a magic trick and just vanished into thin air. Just take a look at this example. Your total gross pay, with overtime and a commuting allowance, is 430,000 yen. Nice. But the money you actually get to take home is less than 340,000 yen. Whoa, that's a difference of almost 90,000 yen. So where did it go? Well, it's not a mystery. It's just a series of deductions. Let's break them down. Okay, before we even touch the numbers, we have to figure out one really important thing: how the Japanese government sees you. This is step one, and honestly, it's the most crucial piece of the puzzle because your tax residency status changes everything.
It basically boils down to two main groups. If you have what's called a domicile, which is just a fancy way of saying your main base of life is in Japan, or you've lived here for a year or more, you're a resident. And here's the key part. Residents are taxed on their worldwide income. Everyone else is a non-resident, and they only get taxed on money they make inside Japan.
But wait, there's a special little subcategory that's super relevant for most newcomers. It's called non-permanent resident, and this is probably you. If you're a resident but not a Japanese citizen, and you've been here for 5 years or less in the last 10, you get a huge benefit. Any income you make outside of Japan is not taxed here, as long as you don't bring that money into the country. This is a massive deal if you have investments or do freelance work back home.
All right, with your tax identity sorted, let's look at the first big chunk that gets taken out of your gross pay. These are the Social Security premiums. Now, try not to think of these as just money disappearing. You're actually paying into Japan's amazing social safety net, a system that's there to support you. First up, health insurance. This one's mandatory. Everyone pays it, but the great thing is your employer pays half of it for you, and the benefit is immediate and huge. When you go to a clinic or a hospital, this insurance covers 70% of the bill. You only have to pay the other 30%. It's a lifesaver. Next is pension insurance. This is the national retirement system, and just like health insurance, your company splits the cost with you. Now, I know what you're thinking, but what if I don't retire in Japan? Well, there's a fantastic benefit for expats. If you pay in for at least 6 months and then you leave Japan for good, you can actually apply to get a big chunk of your money back, up to 3 years' worth of your contributions. And the last piece of the Social Security puzzle is employment insurance. This is a much smaller deduction, but think of it as your just-in-case fund. If you unfortunately lose your job, this insurance kicks in and can give you a monthly payment to help you stay on your feet while you find your next role. Okay, Social Security is done. Now we're moving on to the second major category of deductions, income taxes. And what's interesting in Japan is that you're actually paying two different kinds of income tax. One goes to the national government, and the other goes to your local city. So how do they figure out the national tax? It looks complicated, but it's not too bad. They start with your gross pay. Then they subtract something called an employment income deduction. Just think of that as a standard discount everyone gets for general work-related expenses. After they take off any other personal deductions you might have, like for dependents, the number that's left over is your taxable income. Now, Japan uses what's called a progressive tax system. It just means that the more you earn, the higher your tax rate gets. But, and this is super important, you don't pay that high rate on your entire salary. You only pay the higher percentage on the chunk of your income that falls into that higher bracket. But the national government isn't the only one collecting taxes. You've also got a local tax, which you'll hear called inhabitant tax or residential tax. This is the money that pays for all the local stuff you use every day, like schools, garbage collection, and road maintenance. And here's the good news. Unlike that progressive national tax with all its different brackets, this one is much simpler. It's just a flat rate, usually right around 10% of your income from the year before. And that brings us to the single most important and frankly coolest thing to know about residential tax. It's based on how much money you made in the previous year. So what does that mean if you just arrived in Japan? It means that if you had zero income in Japan last year, your residential tax for your first year is zero. It's an awesome perk, but remember to budget for it because it will definitely show up in your second year. Okay, We have looked at all the individual pieces of the puzzle. We've talked about Social Security, we've talked about national tax, and we've talked about local tax. Now, let's put it all back together and solve this thing once and for all.
Let's go back to our payslip from the beginning. That 430,000 yen in gross pay makes sense. Now we can see the Social Security deductions. Health, pension, employment. Check. Then we have the national income tax. Check. And finally, that 10% local residential tax. Check. You subtract all those and you get your final take-home pay. See? No more mystery.
So let's do a super quick recap of the most important things. Number 1, figure out your residency status first. Number 2, Social Security isn't a tax, it's paying for your health, pension, and job security. 3, you pay 2 income taxes, a progressive national one and a flat local one that you get a free pass on in your first year. And last but not least, don't forget about allowances. Things like commuting or housing support are often tax-free, which is a great way to boost your bottom line. Being able to actually read and understand your payslip is step 1 to building a solid financial life here in Japan. It means you can budget right, save smarter, and really plan for your future. So now that the mystery is solved, the power is in your hands. The only question left is, what's your first move?